Okay, please keep the applause going as we introduce our next speaker coming to the stage. Here, representing an incredible organization called Indiva. Let's hear it for the one and only Niel Marotta.
Okay. Hello, everybody. Thanks for taking some time out of your day to hear the Indiva story. My name's Niel Morata. I'm co-founder, president, CEO of Indiva. We're based in Canada. We're exclusively in Canada at the moment. We're a licensed producer, and we are the leader in the edible category with about 40% market share. So I'm going to talk to you a little bit today about our products. We've done a recent licensing deal last night. Very exciting. I want to talk about that. And I'll leave a few minutes at the end for Q&A, and hopefully you'll enjoy it. This, on the first slide here, you can see a variety of products that we do make and distribute. So we have a factory in London, Ontario, which is about an hour and a half outside of Toronto. We distribute our products to all 13 provinces and territories in Canada, so we're coast to coast. And the success we've had has really largely been driven by licensing award-winning U.S. products and bringing them to Canada. I met an old colleague today, totally out of the blue. I started my career 100 years ago with a company called Fidelity in Boston and was managing money there. And I met somebody who used to cover IMAX, and so this gentleman reminded me that that's a Canadian brand. So I think IMAX and Lululemon might be the only two Canadian brands that have ever managed to go south of the border successfully. There might be another one I've forgotten. But for the most part, brands in this continent go north, not south. And so that was a big part of our initial investment thesis, and our bet was, let's bring successful products to Canada that are award-winning, have had great success in the United States, and increase our odds of being successful in Canada, and by and large, that's paid off with 40% market share. These are some pictures from our facility. I'll let everyone take a look at this at your own leisure, but you can see some of the chocolates we make. Those are Wana gummies, I think pomegranate blueberry, one of the most popular gummies in Canada, pre-rolls, and also capsules. I think we're having some technical difficulties here. Oh, there we go. So our market cap's still quite low, about 35 million, despite being a top 10 LP in Canada. We've got upwards of 2% market share of the entire market. 2% might not sound like a big number, but I think the leader is somewhere around 8 or 9%. We got here from one factory on substantially less capital than our competitors have employed, and we're very proud of that. We absolutely intend and expect to turn profitable in the second half of this year, printing real earnings per share. And so our goal, and this has been our goal from the beginning, was to generate a real return on invested capital and generate real earnings and hopefully be able to pay dividends one day, which great consumer product companies do. I mean, imagine if you had bought Philip Morris or, for the Canadians in the crowd, a cheese company called Saputo 20 or 30 years ago. I remember when Saputo went public in the late 90s. You know, the effective dividend yield on those companies now is probably 30, 40, or 50% or more. And so that's how you generate real wealth for shareholders, in my opinion. And so that's what we intend to do. Insiders own about 20% of the company, including Perry Merchant. Russell Wilson sits on our board. And insiders, my family and I have put several million of our own money into this, so our money really is where our mouth is. This is basically a graph of my life for the last few years. So this is our quarterly earnings and gross margins. We'll report Q4 next Tuesday and Q1 in May. And for this year, 2022, our expectation is we'll clear 50 million of net revenue, which is a pretty good number against a 35 million market cap, in my opinion. And our margins actually are pretty good, you know, mid to high 30s versus many of our competitors in Canada struggling to get, you know, out of single digits. And again, this has really been driven by sales of edible products in Canada. This is a glimpse of the Canadian market. These are monthly numbers. So the Canadian cannabis market now is between 4 and 4.5 billion. We would expect that to double over the next 3 or 4 years. I think that's generally consensus expectations. The edible category, however, is only about 300 million of that number. I'll get into some of this in a minute, but that's only about 5% of the total, as you can see from this graph. If you look at mature markets, the edible category really, and that's where 90% of our revenue comes from, is more like 15% of the total. And there's a good reason for this. We're limited currently in Canada to 10 milligrams of THC per package. That is woefully low. And as a result, 2/3 of the edibles customers are still going back to the illicit market for unsafe products that are not accurately dosed, that contain multiple pesticides, and really are cheaper as a result of the fact that they're illegal. So we're pushing very hard. I co-chair the Edibles Caucus with the Cannabis Council of Canada. We're pushing very hard on the Canadian government to fix this public safety risk and allow us to put upwards of 100 milligrams or more into a package of edibles. We think that will double or triple our business overnight, and we think that change is probably 12 to 18 months away. This really does need to change. It's nice to see a chart that goes up and to the right. So edibles are growing faster than, let's say, the overall cannabis market, but the potential is so much bigger than this is. And I'll show some comparable numbers shortly here for other markets. In fact, here it is. This is something I stole off LinkedIn. And so this is headset data, if I'm not mistaken, showing Colorado over the last 12 months or so. And you can see edibles are north of 15%. And vapes are actually north of 23% versus 15% in Canada. So this is where the Canadian market's going to go. We're proactive in trying to create this change. So if you're looking for a regulatory catalyst and upside, I mean, this is it, clear as day. I bring up the vape category because we announced last night we signed a licensing agreement with a company called Dime Industries based in Orange County, California. We're very proud of this deal. It's our first entrance into the vape category, which is significantly bigger than the edible category. It's about triple its size in Canada, and you can see how big it is in the States at 23%. These are really innovative products, proprietary hardware and formulations, and a premium product that we think will differentiate nicely in the Canadian market. This is, on the right side, is kind of a weird-looking market share chart, but just tries to illustrate the, maybe I'll use the pointer here, but the long tail of other LPs. So there's 128 licensed producers selling products in Canada federally right now. There's over 700 licensed producers. That's probably too many. In fact, I think it's certainly too many. So we rank 10th out of that entire list. We're very pleased with that. We got there largely from our success in the edible market. Now we hope to duplicate that in the vape market, which again is much, much bigger. So I would expect us to start gaining more market share again in the second half of the year. Obviously revenue and turning profitable and move up this table. On the left side, this is data from the Ontario Cannabis Store, which is the largest buyer of products. We sell products to the government in Canada. I should probably clarify that. We don't sell directly to stores. Canada likes oligopolies, and the government likes to play gatekeeper. And so we sell to the provinces. We sell to the Ontario government, the Quebec government, Alberta, the British Columbian government, and then they sell the products to the stores. So being an important producer like we are, and if measured by units, we're actually in the top 3. We sell about 1 million units a month, which I think probably makes us one of the biggest edibles manufacturers on the planet. And so you can see that market share has been successful. Wana is the #1 edible brand in Ontario, and Bang is the #2 edible brand, being in chocolates. So we're very proud of that success, and we hope to duplicate that in the vape market. And beyond that, really what ramping to 1 million units a month has done is really taught us how to make edibles. I mean, we hadn't even made an edible 3 or 4 years ago. Maybe very few Canadian companies even produced any cannabis at all. I mean, the whole market's only 3 years old, 3 or 4 years old. The edible market's just over 2 years old in Canada in terms of legalization. So now we've beefed up our R&D team and our food scientists that are involved. And so the next step for us really is to innovate. Doesn't mean we'll come up with our own gummies and chocolates. We're very happy with that portfolio. But, you know, in Canada, more than 90% of all the edibles sold are gummies and chocolate. In the United States, it's more like 75%. So there's an opportunity outside of those 2 core products to grow and gain more market share. This is another look. I'm going to start by pointing out how silly our market cap is here compared to the multi-billion market caps that are ahead of us. You know, they may have 100 times our market cap, but they don't have 100x our market share. And so I think given the regulatory change that we expect, given the growth potential for edibles, once the limits do increase, I would expect our market cap to go up substantially given how our business is going to grow. I've been accused, and I would say we as a company have been accused of building a real business, but that's what we've done unapologetically. We didn't chase international opportunity. We didn't build massive greenhouses and then write them off. We built one factory, and we've been very successful out of it. This is another look here at the bottom, just of our 10th place ranking, again, against some names that you probably do know. And again, we're very proud of that, given that most of that has just come from our work in the edible space. I'll spend not too much time on this slide, but building this team has been one of the most satisfying things in my career, and very proud of the kind of people and the caliber of folks that we have involved. Without naming names, I can go across this list and name companies like General Mills and Clorox and Nestle. These are folks that made world-class consumer food products professionally for decades, and now they're doing it with cannabis. And I think that's been a huge contributor to our success. And I'm very excited about the innovation that we're going to, we're already pursuing it, we're going to be bringing products to market as early as this quarter and next. And I'm excited to see how our own branded products do. Beyond that, everybody else on this team is deeply experienced in trade marketing, sales, finance, branding, and the like. So we've built a great team, and we run the company pretty lean. We only have about $3 million a quarter of G&A. Our revenue doubled year over year, and our G&A costs went up 8%. So when I say our money's where our mouth is and that we really care, I think that shows in the financials. So this is our house of brands. Indiva is the corporate brand, and we do have some products that are branded as Indiva, and we may see some brand extensions this year from that. Artisan Batch, this is a craft cannabis brand. So we don't grow any flower. We no longer cultivate anything. I'm actually very happy about that. It's nothing but heartbreak and grow, it feels like. And we don't extract anything either. We just purchase distillate. Distillate costs have come down about 95% in the last year and a half in Canada. And so this is why you see that nice hockey stick in our margins. But we buy flower from craft cultivators. As I said, there's 700 licensed producers in Canada. Not all of them want to deal with the government. Not all of them want to deal with getting products listed and the complications involved in sales. So we do have quite a selection to pick from to bring craft cannabis to market and participate in that segment. It's a very small contributor now, but I think over time that brand will be a slow burn and, no pun intended, continue to grow in Canada. Our first licensing deals that we did were, first one was Bang. Some of you may know Bang. I know Jamie Pearson, the CEO of Bang, is, I believe, speaking in the opposite room right now. But Bang has been a Cannabis Cup winner for over a decade in the United States. It's award-winning chocolate. We actually import the same chocolate into Canada to make this product that's used in California and I believe in Florida through Trulieve, where I believe is the licensee in this state. So that is the #1 chocolate in Canada. We have 8 SKUs. We did a deal with Deep Cell. We've launched Ruby and Jules. But probably the most important deal that we did was 2 years ago, where we met Nancy Whiteman, and she entrusted us with her brand in Canada, and we launched Wana Gummies back in September of 2020. We actually signed that deal in March 2020, which most of you remember, a bit of an auspicious date. It was about a week before the pandemic officially began. And so we learned how to make these gummies, believe it or not, over TV screens, broadcasting from Colorado to London, Ontario. And we sell upwards of 700,000 units of Wana Gummies on a monthly basis, which is by far the fastest velocity product in the country. Nothing makes me happier than seeing stores putting Wana on the shelves without us having to do any deals to achieve that. It's a very high margin, high velocity product, and that's what retail stores need. And below that, you see Slow Ride. These are cookies that we actually didn't license. We purchased them, and we take them to market. So we do have the ability to distribute products from smaller distributors, not unlike what we do with Artisan Batch. And then the last piece here that we've done, announced last night, is the Vape Deal with Dime Industries. Dime is very popular in Southern California. So again, we like proven products that have had success in super competitive markets like Southern California. We know that if people enjoy the product in California, or in their case, Arizona and Oklahoma, it's very likely that people will enjoy it in Toronto and Vancouver. This is a look. These aren't all of our products, but a quick look here at some of the 1.0 products. So we do sell pre-rolls and flower, and we do make capsules. Interestingly, because we make capsules, the capex required to start making vapes is extremely low. I mean, it's probably 30 or 40,000 Canadian. Not a lot of capital required. We'll probably invest more in hardware and packaging than that, and we absolutely have the skill set to do this. Below that, you see the Wana gummies. So we've just launched the Wana Midnight Berry. This is selling very well in Canada. It contains CBN, which most people would consider the sleep gummy. And they work. People have told me they're dropping their phones on their faces and everything. This is Bang Chocolate. We're up to 8 SKUs with Bang. And actually, I think it was in the second quarter of this year, or of last year, pardon me, Bang was the #1 selling cannabis product in Ontario. Not #1 chocolate or edible, but #1 product by units sold. So we're very good at manufacturing and distributing these products, and they've caught on really well in Canada. These are the cookies, and then below that, I should talk a little bit about this. This is our next big launch. We signed a deal back in December with Groen. I don't know if Christine is here in the room today, but I think she's at the conference, and we love these gummies. They're gelatin-based rather than pectin, which is a little bit different from Wana. But they incorporate a lot more of the minor cannabinoids, and we think this is where the trend is moving. So more CBN, CBG, and more robust ratios. On top of that, we think the price point will be very attractive. And so we've had these 4 SKUs already accepted to launch in Ontario in July. And then the candy-coated chocolate pips will follow in the fall. It's not fun launching a chocolate in the hot summer. And believe it or not, it is quite hot in the summer in Canada. This is some examples of our trade marketing. I won't spend too much time on that, and maybe with that, I'll just leave a few minutes for Q&A, for questions. Thank you so much.
All right, if there are any questions in the audience, we can take those questions now. I'll run over to you with the mic. Just raise your hand up, and we'll fly by. Please just introduce yourself and the company you're here representing.
I'm Todd Wax. I'm the CEO of Next Water. I didn't see any beverage in your portfolio. Is that by design?
Short answer is yes. There's some pretty well-capitalized companies in the beverage space. I mean, Constellation and Coors Molson are big companies. They know how to make beverages a heck of a lot. They've probably forgotten more than I'll ever learn. So, yeah, I think that's probably a sector that we'll just avoid as a subcategory. Not that it's not interesting. I think beverages have a great long-term future in cannabis. It's interesting, right? I mean, most of the people in this room, I'm 48 years old. Most of the people in this room, if they've used cannabis, their first experience is probably smoking. And maybe the next generation, whether it's my kids or grandkids or what have you, maybe their first experience will be with a cannabis beverage rather than smoking. So absolutely believe in the long term, but I don't like the competitive landscape.
Quick question. We had some questions that were submitted on the card, so while I encourage you in the audience to prepare your questions now, I'll ask the ones that we have prepared. What do investors need to know about the Canadian market?
Well, I think the Canadian market still has a huge amount of growth potential, right? It's a $4 billion market now. We sell 9 or 10 billion a year of beer in Canada. We like beer. We also sell another 9 or 10 billion worth of spirits and wine in Canada. So, the entire alcohol market, let's say, is 20 billion. So there's no way that cannabis is done at 4 billion. We would expect that to double or triple. And cannabis is a big market. I mean, Canada, it's as big as California in terms of GDP, population, and we've got 2,500 plus stores in Canada. So it's absolutely worth looking at. And as it relates to Indiva and the edible category, I think I've laid out the case that potencies will increase. We're very proactive in trying to get them up, and when that happens, we would expect the market to double or triple and the edible category as a percentage to triple. So that's a sort of 5 to 10x opportunity in front of us, and that's absolutely worth getting out of bed every day for.
Certainly. Take one more question from the audience if we have it. Just looking for a hand. All right. All right, sold to me. Last question. How do your extraction services work, and why should investors look into it?
We don't extract, so don't call us for extraction services. We will not provide it.
And on that note, let's give another round of applause to Niel Morata.